Welcome back to the ETF Inspector. It's Tuesday, first day of July, and it's just turned 7 o'clock. So this will be an earlier video than you guys are used to because my kids' swim practice got canceled due to thunderstorms in the area. So getting this done a little early so I can get a little extra family time before bed. Okay, so this video is for YieldMax weekly paying funds, ULTY and LFGY. ULTY is the Ultra Option Income Strategy Fund. LFGY is the crypto industry and tech portfolio option income fund. As you see in both of them, the goal is income, right? Not growth. So it's all about paying out. That's why they pay out weekly. The fund price could be a whole lot higher if they did not do this weekly distribution, but that's what it's all about. Reminder, I'm on X, and I even let you know things like, hey, tonight's ULTY LFGY video will be early if you like to catch the premiere. Some people like it because then you can chat in the live chat compared to just watching it. All right, but if you got money in these funds or if you're thinking about it, this is the video for you because we go over everything they do with the money. So we'll take a big picture look and then we'll dive deeper. Starting off, both funds dropped today. ULTY down to 619, went back up a little bit in the aftermarket. A lot of red. If you looked at the thumbnail, I color code them the same as they are for the day in the market. So green for going up, red for going down. And then LFGY also went down $40.11. But again, that had a pretty nice increase again after hours. So we won't go on that screen for getting our deep dive details. We'll go to the next. So after 5:30, 6 o'clock, the intraday trades file becomes available. Went through and downloaded it. Right, it's got all of the trades for all the YieldMax funds. I go through, I find the ULTY. It ended up being like 110, 120 trades. Looks like 111, I think. And then LFGY, we start at 360. We go to 411, so 51. Not a terrible day. And then we copy those, we paste them in here. Unfortunately, if anybody's great with Excel, help me out here. I have to go through and everywhere I want to write an if-then statement and be able to make it to where if there's a B or a BC in this column, then I want to multiply this column G. If there's a B or a BC in column E, then I want to multiply column G by -1 so I don't have to go in and manually put a negative sign on every single one of them. Because as you saw, even when it's a buy, it just says the amount of contracts and the price. It doesn't put a negative or a positive on anything. So every single purchase I have to put a negative in manually. So if anybody can help me out with Excel with that formula, I would greatly appreciate it. Okay, so starting out, in general, they just bought more shares of most of, if not all, but most of the shares, the stocks within the fund. First Solar, Mara, MicroStrategy, AST, Space Mobile, Oklo, AppLovin. Skip these because they were sales. LabU, that's the biotech bull. IonQ, Mobileye, NewScale, Palantir, Reddit, Rigetti, Supermicro Computer, Tempest, Tesla, and Upstart. They sold, if you noticed on the thumbnail, there was a line through TNA, so we no longer have the triple leverage small cap bull. Sold all their shares. Okay, so now anytime we do this, anytime they buy any more shares, they go ahead and add to the option position that they already have. In ULTY and LFGY, they trade differently. ULTY does 90% of the time. Just recently, they started changing things up a little bit, and I mean very recently. This isn't the big changes you've been hearing about, but they do a collar strategy. That's where you own the shares, you sell a call out of the money above the price, and you buy a put out of the money below the price. The purchase put protects your share prices, and that has been protecting our NAV. And then the sold call is what's supposed to bring in the income that they can pay out. Okay, so everywhere where they bought shares, they're going to sell more calls to go along with them and buy more puts. So that'll be the majority of these. There are a handful of rolls, so we'll look a little deeper at those. And then they started a new put spread here on AMD, so you saw we added that. So they didn't buy any shares of AMD, but they sold. Is AMD a 138? Does that sound right? Yep, 136. So they sold 138s and 140s, and they bought 135s and 134s, all for next Friday, and that allowed them to collect $126,000 in premium. For AppLovin, this was just selling more. I call it selling, even though it's buying, but you don't care about them buying the protective put. This is where we make the money. So they're selling more calls for those new shares, almost $19,000 profit. ASTS, this is our first roll. They went ahead and closed out their 56s for this week, paying 42 cents, and they sold 51s, so they were able to drop the price, collecting 91 cents. And then they also bought more shares, so they sold another 878 contracts besides the 3,400 and got an even better price, $1 on them. Overall profiting $787,000 today. First Solar just selling more to go with the new shares, 41,000. Hood, they took a loss. Robinhood just keeps on going up, so they bought to close their 88s for the 3rd, paying 1061, and then they sold 105s for next week, the 11th, only be able to collect 296. So that hurt a lot. $1.8 million to the loss column. IonQ and LabU, Mara, and Mobileye, these are all just selling more options to go along with the new shares that they just bought, collecting 95, 35, 141, and 60,000 respectively. MicroStrategy, they just did some adjustments. So this was, they bought 17,000 more shares, so they sold 170 more contracts for that first part, and then they just adjusted their protective put. So they closed the 35s, they sold them, and they bought 33s. So they were just looking to take a little profit there. I'm sorry, 350s and 330s. So they adjusted where their protection is down. So that's going to allow them to take a little bit more loss if it goes down. If it doesn't, then they basically made 50,000 on that decision. Those are for next week. Oklo, they closed their 63s and sold 5750s, and then also sold some more 5750s. So they didn't adjust their put on this. They just closed out the call and sold a new call, and then added to it with the new shares. That's what these two 762s are, profiting 292,000. I forgot to say MicroStrategy's profit was 77,000. Palantir, nice profit, 724,000. What'd they do? Closed out their 141s and 144s for this week, paying 17 and 12 cents, and then went ahead and sold 134s and 135s for next week, collecting $2.50 to $3 a share. They actually even made money closing out their puts, selling them for 49 and 52 cents. Basically just pays for the new puts, not quite, but nice profit, 724,000. Yep. Okay, Reddit, Rigetti, and RH all doing the same thing, just selling more options to go with the new. Well, it wouldn't be new shares because they didn't. It's new shares on Reddit and Rigetti. They don't buy RH, so this is just putting more money to use there. That one cost them $399,000. Not sure what they're doing there, but $45,000 and $48,000 profits on the other two. SMCI closing out their 52s for this week for a win, paying 8 cents, selling 49s for next week for $1.23, and then all the extra to go with the extra shares got another 71 cents per share on them. 347,000 profit. SMR, that's New Scale Power, pretty new for us. Just closed out. I can't remember if they're I think they're 42.50. $42.50 is what they closed for 10 cents. They opened 40s for next week for over $1. Then they sold some more to go with the new shares, collecting an even higher premium, $128, $607,000 profit. Tempest AI closed out this week's 71s for 10 cents. Opened up 66s for next week for $1.54. Sold some more to go with the new shares, $674,000 profit. TNA just closed it out. All right, bought to close the calls that were sold and sold the puts that were owned. Lost $1.1 million on that closeout. We're all done with them. Tesla, I shouldn't say all done. We're done right now. Tesla closing out for another win, right? 335s and 340s for this week, paying 43 and 51 cents. Sold 312.50s and 315s for next week, collecting over $6 for each of them. They also made a lot of money selling the puts that they had for this week, and then bought for next week. So $1 million profit on the Tesla roll. Upstart adding more contracts of options to go with the new shares, $131,000 profit. And then VRT and Vistra Corp, they don't own shares. They just have call spreads that they're on, and they're debit call spreads. And so they added to those, bought more. They're really not making sense, especially when we get to the next page. So I might be missing something. If there's ever like a YieldMax person watching, like I know Scott Snyder watches Retire on Dividends reviews of Misty. If there's anybody watching that actually knows this stuff and I'm getting things wrong, I want to be corrected. I don't want to just be sitting here saying something wrong. So please correct me. But when we talk about these debit spreads, they're not going to make sense to you guys. But we total all the trades up for today, option-wise, and they profited $1.1 million. So that's back-to-back profiting days, $1.2 million and $1.1 million. Unfortunately, this one comes along with a steep decline in share values. That's what all the red was on that first screen. So we're going to run through and see how stocks within the fund did, and that's going to show us why it happened. In orange, that's going to be things that we just talked about where they rolled. So we're not going to waste our time talking about an option if it got rolled. Also, stick around to the end of the video. I don't know if I mentioned this at the beginning or not, but I will go into a deeper explanation. I want to get all the information out and then go into some deeper explanation for some people that have been asking me questions in the comments on what all this stuff means. Okay, so AppLovin lost 3.8%. Their calls are now 5.4 and 6.1% out of the money with not a lot of time left, right? Closing on the 3rd this week, and the 3rd's only a partial day, so don't get caught thinking that you can make it to the regular end of day if you're trading options. AST Space Mobile down almost 3.5%. They rolled those that are further out of the money and just went ahead and take the win. They've still got 4,900 contracts that are 15% out of the money. So we will see about when they close those out. Coinbase lost 4.3%, taking their calls further out of the money, 8.1%. First Solar down 1.5%. Calls for this week are 4.3% out of the money, and next week are 2.7% out of the money. Robinhood down 1.39%. So I'm curious. I wonder if they rolled these at before it dropped or after. It would depend. It would, have an effect on how much they had to pay to close those. But they rolled the ones that were in the money, and they still have ones for next week that are 2.89% out of the money. IonQ took a big hit, 0.66% down, taking their calls for next week. They've already been rolled, 9.7 and 10.9% out of the money. I feel like, all right, IonQ, I feel like I forgot to, okay, never mind. Thought I forgot to mark the biggest winner and loser, but they're just further down. LabVIEW up a little over 0.5%. Calls for this week are still 6.5% out of the money. Mara Holdings up 0.1%, still in the money, 1.27%, but so far this is still not hurting. To go up 0.1% is probably going to pale in comparison to the amount that comes off the premium each time a full day goes by and decays away. So still not closing these out. As long as Mara doesn't have a big surprise day on us, this is going to look like, it's being well played. They've also got 16s for next week that are 1.9% out of the money. Mobileye up 0.5%, still 2.3% out of the money, expiring on the 3rd. MicroStrategy had a rough day. Right after they had a big day, came right back down. I can't remember. I don't want to waste your time. We could go back and see if they rolled after it, if it popped up yesterday. But down 7.6%, no, they didn't because they're still for this week. 5.1% out of the money on their 392.50s, and they've got 410s for next week that are almost 10% out of the money. Oklo down 7.5%. They went ahead and rolled their further out of the monies, even though they're all the way till next week. They rolled them anyway because they were so far out of the money. But they still have 3,300 contracts at 59.50. That's 15% out of the money. And these are good. These are good terms, right? If you're not familiar, out of the money on something that you sold is good. You want it out of the money. Palantir down 4.1%. They rolled all their options, so we don't even need to talk about these. When tomorrow's holdings come out, it'll update everything over here. I download the holdings in the morning, upload everything over here, look up all the prices in the afternoon, after close, fill everything here, and then download the trades between 5:30 and 6 o'clock, and that's where we get everything from that first page we were on. Reddit up 1.1%, still 1.82% out of the money, closing on Thursday. Rigetti down 4.47, bought us a little breathing room. Now their $12 calls are almost 6% out of the money. They've got them for this week and next week. 8,300 contracts and almost 14,000 contracts. SMCI down 3.69%. Another one bought us some breathing room. So this got real close to being in the money yesterday. They left it alone. Another day ticked away, and it dropped. So that's going to be much cheaper to close and roll than it would have been if they had panicked. But they did. They rolled the others because they got so cheap that they called them a win and rolled them to the following week. New Scale, SMR, they were the big loser over here. 8.7% decrease on the day. They rolled these options because they became so cheap that they just closed them out as a win and pushed them to next week. Tempest AI down 6.4%. Another one so far out of the money. They rolled them, call it a win. I like when we get some wins early on and roll them to the next week. That makes Friday not so full of rolling every single stock in the fund. TNA, we're done with them. So now the only person left trading them is Retire on Dividends. He'll be upset if he watches this and sees them getting out of TNA. TQQQ, another triple leverage fund, down 2.5%. Great on their part. These were in the money yesterday, and they didn't panic. Now they came back out of the money. So obviously they will be much cheaper to close tomorrow if they do tomorrow. Otherwise, if they wait till Thursday, they'll get even cheaper so long as the stock doesn't run back up again. So 0.1% and 2.6% out of the money. We need them to stay under 81 now through the middle of Thursday. Tesla down 5.3%. They went ahead and called everything a win, rolled it out to next week. And Upstart was the biggest winner in ULTY, up 5.3% to 68.14. That took them into the money by 3.14%. They didn't panic and roll. So if it gives a little bit back tomorrow, that will look like a smart move. I just realized when I got there, I forgot to talk about RH here. So this one, I can't even remember. I think RH was up. They were up big too, 5.2%. But they only have a call spread on this. They purchased a call at 180, and they sold one, well not one, 811 at 202.50. These 180s are now 9.5% in the money, so they're they're making about the most. This can go up to 202.50 before they stop profiting on this deal. So a big up day, that helps. That's making this valuable. That's out till next week. And then RH, similarly, they have purchased calls at, or not RH, VRT, Vertiv, purchased at 115, sold at 129. Stock's at 122, so it can go up another $6.50 in order to make the most amount of money. And then finally, Vistra Corp. Both of these came down today too, because this one was like 190 yesterday. Purchased at 170, sold at 197.50. The thing that was odd about it was that they had purchased well in the money. I mean, it was like 180 something, 190 when they purchased the 170 and sold the 197.50. So it could only, the best you could do is go up slightly. Didn't make sense to me. But again, if I'm missing something, somebody tell me. All right, so ULTY, we talked about it for 20 minutes already. Let's get going. There was a huge increase. That's why you saw all that money getting put to use. It's just exploded lately. Almost 10 million new shares yesterday. So we're up to 116 million outstanding shares. We're over 700 million. We are not far away. It will not be long before we are a $1 billion fund. So it's crazy, I know. All right, now we're ready to switch to LFGY. We are able to get through them much quicker because it's a little bit different. So they do not do the collar strategy. They buy the shares. So these two funds actually buy the shares, unlike a lot of the other funds you're used to with YieldMax. They sell calls to generate income. Sometimes they protect them by buying another call further out, so it's just a call spread. Other times they don't. And if it runs through, then they just got to keep on paying higher and higher. But they trade a lot differently, where ULTY will do basically all or nothing. Every once in a while they'll do like half of the contracts. LFGY will just do random things. They'll sell one contract, right? Sometimes you got to trade for $16. So I'm not going to sit here and read you through 50, 60 lines of that kind of thing. So the only ones I focused on are the ones where they rolled. They rolled coin. They bought their 390s for 26 cents a share, and they sold 360s for next week for $5.30 a share, profiting $267,000. Core Scientific, they closed out their 1650s for $1.19, so this one's not a win, and they sold 190s for next week for 77, but along with a little bit of extra sales, almost broke even, $2,000 loss, not a big deal. Robinhood's the bigger loss, closing out their 90s for this week and selling 105s for next week, and then they're buying calls further out. So basically they're limited. The most they can make is $15 a share, or no, that would be if they purchased it. The most they can lose is $15 a share, having a $15 spread between 105 and 120. But they took a loss, paying $8.97, collecting $3 a share. So $700,000 loss. Mercado Libre closed theirs out for a win. There's not a lot of contracts to trade on this because the stock's $2,600 a share, $2,500 maybe today. Closed out their 2610s for this week and opened 2600s for next week. See, $15 a share is what they collected. $1.51 is what they had to pay out, but it's only 23 contracts, so $24,000. And finally, Tesla was the last roll. Closed out their 340s for this week, sold 320s for next week, paying 45 cents, collecting $5 to $6 a share, $73,000 profit. But everything totaled up, combined, comes to a loss of $321,000. That's a realized loss from all today's trades. And as you can see, they also took a small loss, well, medium loss, $2.8 million on the value of their shares. That's not an actual loss. That's just value decrease. All right, so as we go through, BitDeer down 1.5%, taking them 1.7% out of the money, but they're out till the next week, so we won't be worried about rolling them this week. Clean Spark up 0.45%. They're in the money slightly, about 0.75%, but they didn't do anything with it. They're going to let it keep going. Coinbase down 4.33%. Like we talked about, they rolled these. That's why it's orange, under construction, right? We'll have new information there tomorrow. So they took that win. Core Scientific up 1%. So they rolled the ones that were deeper in the money. They're 1650s. Not a big deal. 128 contracts. They still have 5,600 contracts that are out of the money, expiring on the 3rd. They're 1.4% out of the money. Galaxy Digital down 2.6%. They're 12.6% out of the money. But they're just going to let them keep going because they are also till the 11th, not the 3rd. GameStop down 2.9%. Bought us some breathing room on these 2450s, but again, that's 40 contracts. We're worried about the 1,700 contracts at 25. They're 5.5% out of the money. Robinhood down 1.39%. They rolled them. I can't remember. I hope they took a win on that. What did we say? No. So I'm not sure why on earth, on a down day where it got closer to the money, unless they must have a feeling that Robinhood's just going to keep on going up and they just got a lucky day. Otherwise, why roll on a down day for a loss? Hut 8 Corp down 0.6%. They were slightly in the money. They're now slightly out of the money. 1850 is what we needed to stay under. It's at 1848, and we got to make it all the way to next Friday, 7-11. IBIT lost 2.25%. No options get traded with IBIT. It's just the value of the shares themselves. Mara Holdings up 0.13%. Still 1.9% out of the money. They expire next week, though. MBTX, they don't own shares. They only do spreads. They have a call spread and a put spread. So their call spread is a credit call spread. So you want it to the 260 to end out of the money. It's currently 4.2% out of the money. The reason this is blue is because it's out of the money, but that's not necessarily good because this is a put spread and it's a debit put spread. They bought the 230, so they need the stock to drop below 230 before 12/31 in order to make money on this. So we're watching this tick away. It was like a 6 million, 1 million. Now it's under 5, so they are continuing to lose value on this trade. They need MBTX to drop. Mercado Libre down 4.2%. They closed them out, rolled them. Again, that was the one they paid $1.50 to close them and collected $15 on the roll to next week. MicroStrategy, the big loser over here, 7.65% down. Took their calls 9.8 and 10.5% out of the money. They left them alone. They're all the way till next week, so there's still lots of premium associated with them. So that helped with those. We don't need it to drop anymore though, because as it drops, we decrease in value. So we want it to basically just stay below our call strikes, so we have the highest value along with the most amount of premium collected. NU Holdings down 0.58%. Calls are now 2.6% out of the money, expiring on Thursday. NVIDIA's expire Thursday too. They're 1.1% out of the money after dropping almost 3%. So today's drop was good for us as far as NVIDIA is concerned because they were in the money. Opera, the big winner over here, up 7.57%. Took their calls into the money by 1.62% or 33 cents, as you can see. They went ahead and just let it sit. These are all the way out. Jeez, they're out till the 18th. So they can't afford it to go up anymore, and they need it to come down over the next 2 weeks. PayPal up 1.3%, taking them slightly into the money by 0.3, but they're going to sit and hold and just let some time go by before they roll these. 75, so they're 29 cents in the money. At the end of the day, right, if you're only slightly in the money, let's say it closed on Thursday, 75.29. This is hypothetical because they're not going to wait till the end to roll. They would only cost 29 cents to close out. So they're not that bad. You're still taking a win if you close for 29 cents. But since it's not closing day yet, there's still time premium also associated with it, so it would be more. Riot Platform's down a little over 0.25%. They've got calls at 11 and 11.50 expiring this week. They're 2.4% in the money and 2% out of the money. So we'd like it to come down 27 cents. Tesla down 5.34%. They took the win, rolled them out the next week. And finally, Block up 0.5%. Took them just barely in the money, 0.4%. But no action taken. We're going to let it ride. Overall, like we said, $2.8 million decrease in value. Not a loss, just a decrease in value. Outstanding shares has remained the same for a decent amount of time now, 3,575,000 shares. Net assets around $145 million. All right, tomorrow is Declaration Day, so around 6:55, 7 o'clock in the morning, we're going to find out what all these are paying. We'll see if our 48-cent guesstimate was correct, and 9 cents over on ULTY. Okay, that's it for the regular portion of the video. I'll even give you the dad joke of the day. So if you're not interested in trying to understand how the options or the strategies worked, you can go ahead and just go after you get your joke, your chuckle. But then stick around. Oh, here, let me show you what I'm talking about too. So got questions from, I think his name, TG Waste. TG Waste. All right, so this is especially for you, buddy. We've been having a conversation back and forth, asking about the green and the columns, and then asking about options. So just thought, rather than making a whole separate video, perfect opportunity at the end of this video, I'm just going to explain a little bit extra for you. So thank you, everybody. If you're signing off now, appreciate everything, all the comments, all the likes, all the shares. I get updates weekly from YouTube, and it shows me just how much everybody's doing for me, and it's great. I appreciate it a lot. So dad joke of the day. Of all the inventions of the last 100 years, the dry erase board has to be the most remarkable. All right. Have a great day. Good luck trading tomorrow. And we're getting close to the 4th of July, so get ready to have some fun and spend some of this money you guys are making. All right, that's the end for everybody else. And if you are interested, I just want to talk quickly and some examples for what we're talking about when we talk about these things. So we'll look at ULTY. Let's see if there's I don't know if there's necessarily a simple one. So let's just say AppLovin. Okay, so ULTY is going to buy shares of AppLovin. All right, they have 96,100. When you're selling options, an option is worth 100 shares. Okay, so if there's, as you can see, right, if let's see one that's real simple, 91,800 shares of Coinbase. So you'd have to divide that by 100. That's 918 contracts you can sell. That's why you see 918. They are selling and buying the most that they can. Well, you could buy more puts. You could buy all you want. So options are basically a contract, right? I keep calling them contracts. If you need to think of it differently, it's a deal. So when they sell, we'll use Coinbase here to make this simple. When they sell a call for, let's say this is this coming Thursday. It's not showing which one it is. Here, we'll move here. 7-Eleven, ASTS. They sold a call for $41. Here we go, $56. Sold a call for $56. Okay, ASTS is at $45.11. What they're saying is, I will sell you 100 shares per contract. So I'll sell you my shares for however many contracts you bought for $56 on July 11th. And so there's got to be a buyer and there's got to be a seller. So they say, I'll sell these shares on July 11th or before that if you decide for $56. That means the person buying it thinks the stock's going to go higher than that by then. So what happens is, let's say the stock stays here all week. Well, as it sits here every day, the value just keeps on decreasing and decreasing and decreasing. So that's why they will buy to close early, call it a win, and close it out. So when you sell this, right, as soon as you sell it, you notice they have negative contracts. They sold a contract, you have negative, that number's got to get back to zero. So they're going to have to buy 3,435 contracts at the end of this. So what they want is the further this gets out of the money and the closer that it gets to that end date, the smaller the cost is going to get, and so the smaller overall cost will be. So they're selling an agreement. I'll sell you my shares for $56 on the 11th. Now, if the stock price goes up to 100, then they still have to sell them their shares for 56, and so the buyer of the call won that deal. If the stock price ends below 56 by the 11th, then that's worthless, because why would the person still want to buy your shares for 56 if they could go buy them on the regular market for 46, 50, whatever? So that's what's happening. You're selling an agreement, but since you sold an agreement, you'd have to close it out at the end. That's not necessarily the only way things work, but that's the way they work within this fund. Okay, so they don't let anything make it to expiration or go to assignment. So they won't ever actually sell their shares, so they're just always going to pay the price to close it out. So when it goes in the money, like down here, right, Robinhood, in the money, 4.69%, then the price keeps going higher, and they got to pay to close it out. Let me see if we can, hoping this doesn't open a big can of worms. Let's see where we can find that Robinhood trade. Got thousands of trades we've gone through here. Stick with me. Okay, so we were talking about Robinhood there, right? We bought the 88s. We had to pay 1061 to close out these 88s. Let's see when we sold them. We bought the other half of them yesterday for $613. All right, right there. That's a small portion of them. We sold 88s for $1. We collected $1.08 on that day. The larger portion is going to be somewhere else. Right here. Okay, so we collected $1.35 per share, $1.86 per share, $1 something per share. Okay, but the problem is the stock went up too high and too fast. So then they had to pay, as you saw today, $10.61 a share. So the goal is for them to end up being worthless, because you sell and you collect the money in the first place, you got to buy it back at the end. So you want to buy it back, cheap, not expensive, right? Like these Palantirs, they bought them for 12 cents. They sold them for many dollars, and they bought them for 12 cents, and then that's how you result in a win. So that's the way that side of it works. The puts are kind of the opposite. They buy the put, and the put is protecting. So a put is saying anytime you're buying something, you've got the right to the deal. Anytime you're selling something, you're selling the right to the deal. So when we buy a put, we are buying the right to sell. In this instance, AppLovin, we're buying the right to sell our 652 contracts, or what's that come out to? 65,200 shares for $305. So somebody sold us that. We bought it. We paid money for it. If this stock drops to $5, we still get to sell them for $305. That's how a put works. You are buying the right to sell your shares for that price. In a call, you are, if you bought the call, you're buying the right to buy the shares. So we sell the call. So we are saying we'll be the seller. We will sell you our shares for $355 no matter what price it gets to on July 3rd. But then this is, we get to sell our shares for $305 no matter what price it gets to. And again, they're not going to actually sell the shares, but if the price of AppLovin drops, then this becomes more valuable, right? Because anybody's going to want to be able to sell their shares for $305 if the stock's under $305. So this becomes more valuable. The value of that goes up. So as the shares decrease in value, the put will increase in value to help offset it, and that's what protects our value of our fund from just tanking all the time. Okay, so now they're able to make money selling something, calls, and trying to distribute it to us. They protect themselves by buying something with some of that money, the put, so if the price goes down, their value goes up to offset it. The goal is to stay within those ranges and to just keep all that option premium that they collected. But when it goes up above that, it's okay, you collected some, you're going to have to spend more than that to buy it back, but that increases your value of the fund. So then, let's say, tomorrow or the next day, Thursday, they pay out a 9-cent dividend. If the stock was $6.19 on the close on Wednesday, it'll open $6.10 on Thursday. So the more your value of your fund goes up, right, you can afford to pay your 9 cents and still be up above where you were sitting before. So that, in a nutshell, I hope that helps explain things. I hope you get to see this TG Waste. And anybody else, there are definitely better people at explaining options than me, for sure. So I guess since we're doing it, did I already close LFGY? LFGY is slightly different. They don't buy a put, so they're not protected on the downside. If everything in LFGY tanks, the price of LFGY will drop drastically. Okay, what they do, they sell calls to collect money. The way they protect themselves, they only protect themselves if the price goes too high, and that if that call was going to get expensive, they purchase a call on the other side. So now that will go up even with the 1150, and the 1350 will go even dollar for dollar once it hits 1350, which means you're capped at the most you could have to pay total. Your net loss between the two would be $2 a share. So sometimes they do it, sometimes they don't, right? Like they didn't protect these. All right, that's all I got for you now. Hope that helps you. If you have more questions, please feel free to ask. I will keep trying to help you, and I can point you in the right direction. I like Options with Davis for really explaining how options work. Right, he's got all kinds of ideas on crazy strategies and stuff like that, but you can go through his playlists and his videos and find him just explaining calls, explaining puts, explaining spreads. And Retire on Dividends actually has some whiteboard videos. I don't know if it's in playlists or what, where he just explains, there you go, options for beginners, calls and puts. Okay? All right, that's all I got for you. Have a good night. See you tomorrow.